You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network, where we have quite a few programs for you guys to choose from and enjoy, including many, many archived episodes of course, this fine program, Volatility Views. And where can you find all of that goodness? Well, of course, the mothership, the flagship, theoptionsinsider.com. And while you're there, of course, click on some articles, some headlines on the options market, some breaking news from the world of options, some education, some analysis, some unusual activity. We have quite a bit of that. So not just all about the radio here. We do actually do a lot of written content as well. So check those out. And while you're there, of course, you can always hit the Insider Radio Network tab or head on over to iTunes or TuneIn or Stitcher, wherever you get your favorite programs and your audio journey has begun. You can always get us, of course, as well via our mobile app available for iOS, Android, and the beloved Fire OS. And we're not streaming live this week, listeners, so no Mixler live chat this week, listeners. We'll be back next week. But we are, if I sound a little bit different, it's because we're recording these things a little bit different this week. We're actually coming to you live to tape from the scenic CBOE Options Institute, where I am joined, not in the corner office, no, but via the palatial classroom here at the Options Institute by one senior instructor, Mr. Russell Rhodes. Russell, welcome back to the Volatility Views program, sir.
It is so wonderful to see you in person. And, you know, it
is a beautiful sight, I agree.
I know. I took a secret selfie and just tweeted it. So although we're not live, people can at least see where all the magic happened this week in the cavernous classroom here at CBOE.
Cavernous, indeed. Huge. And we will have a class coming in a little bit later to join us, listeners, probably towards the latter half of the program, so maybe we'll get some live listener comments and feedback then. But Russell and I are soldiering on. Sans greasy meatball this week. Congratulations go out to him and his wife. They just had their second child, so clearly he is not available for some volatility viewing. Maybe he'll be back next week to cook some fun things on the program for us and have a side cooking show while we're doing.
He needs to bring some Hot Pockets
yes,
for everybody.
He needs to bring all sorts of crunchy and non-audio friendly foods with him to produce the program. All right. With my team assembled, just Russell and me today, we're going to dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, that music means it's time for the Volatility Review. Of course, the portion of the show where we break down what's moving, what's shaking, what's lighting things up in the market today, as well as in the week that was, from a volatility trading and analysis and activity and research and all sorts of fun things volatility-wise during the week. We are, of course, recording this middle of the session here on Friday. If I can pull up the date correctly, that would help, of course. 18th, yes. 19th, I'm sorry. Russell misled me. 19th. Friday the 19th, right around noon Central, 1 p.m. Eastern, so middle of the session here. Most of the major indices off slightly on the day. The Dow, the S&P, the NASDAQ off a fraction of a percentage point or so, about a third to a quarter, depending on where you're looking out there. And VIX Cash elevated slightly today, up trading about 1180 or so right now. We'll see if that settles back down a little bit. I need to settle down a little bit by the end of the show, Russell, to get more in line with my estimate / guesstimate from last week. But if we settle down a little bit, I think I'm looking pretty good. Might be my third week of victory in a row. We shall see.
I'm hand signaling things to the floor.
So yes. It's just crush it. Just go out there and crush the VIX right now. Yeah, we're about steps from the VIX pit listeners, so maybe we'll gesticulate to them and see if we can crush some things. Yes.
Is that a word?
That is indeed a word.
Okay.
I have to buy Russell a thesaurus before our next program, so he can broaden his vocabulary suitably to match his corner office status here at the Options Institute. All right, Russell, it's been an interesting week. Of course, I mentioned VIX Cash hovering right around south of the 12 handle right now. It had some earlier this week. Our friend Miss Yellen and crew managed to juice a little vol out of the market, squeezing things up to right about flirting with the 14 level. I don't think it broke the 14 handle, but it got pretty close to it. And then immediately post everything fed, it settled right back down. And as we said, right now it's still vacillating south of the 12 handle as we speak. So it's not exactly the most volatile period. We've kind of been talking about this on the show for a while now. That just aside from the FOMC, aside from, of course, some of these random macro events like Brexit and others, and of course, earnings season didn't really light the world on fire from a volatility perspective. So now we are in the proverbial doldrums of summer. Not a lot really to perhaps spark the imagination, spark the vol. Half of the institutional volatility crowd is off in the south of France, enjoying themselves right now this time of year, and not really out there slinging a lot of VIX. So things are, shall we say, thin at the moment. So it's an interesting environment to be looking at vol. But I was saying on one of our other shows, anyone could do a fun, easy, interesting show the day after Brexit when things are selling off. That's low-hanging fruit. It takes the real pros to come in and do a show in the middle, the teeth of the summer doldrums, and try to find some interesting nuggets out there. That said, Mr. Rhodes, what was it that caught your eye in this week's activity or perhaps lack thereof?
Well, our settlement was up around 1280, which was a decent level. It just happened to occur near around when we got whatever volatility we got this past week. What's really catching me is the absolute amount of complacency that you got going on right now. And this is the time of year where, as you mentioned, it's very difficult to come up with things to talk about, but all we have to do is back up 12 months. And things were just like this about this time last year.
You're right.
And we went into a weekend.
And then nothing happened last year that I could think of notes really this period.
Everybody was on vacation. They were on their yachts. Did you see that yacht out on Lake Michigan that's got 2 helicopters on it?
I didn't, but now I want to go see it.
That is a volatility trader's helicopter. That is a volatility trader's yacht.
Maybe a 1x2 trader out there flying some helicopters now.
So and apparently doing quite well with it. But it's very quiet. One of the things that we talked about, and you mentioned that we're in the classroom, we were talking about the COT data, and I mentioned it last week as well. And I've created a little chart, and I think I'll tweet it out, and probably tweet it out again when this is actually being sent out. But you can look at different market participants and their net positions with respect to are you dealers, are you regular old funds, and are you leveraged? And the leveraged guys are about as short VIX futures as they have been in the last 12 months. And if you backed up 12 months, they were very short as well. So, volatility, when it spikes, it starts out like a whole lot of tension and a rubber band and all that kind of stuff that just breaks. We got a lot of tension right now. You can feel it in the air.
It's not a term we really talk about a lot, here on the show, the short interest of VIX futures. And I'm glad you brought up the VIX futures because it was a hot topic last week. It still is a hot topic. We were debating a lot. I think we referred to it as a mysterious or strange or just downright bizarre a term structure we had out there. We had listeners asking about why things were at such a steep premium, and we're still in this environment right now. I'm looking at the VIX futures right now. We have the cash obviously south of the 12 handle, and the SEP futures north of 14.5, the OCC futures 16.5. So you're talking serious premiums. In fact, we have a follow-up question. I'll just bump him to the top of the show here because it's germane to what we're talking about now. It's a follow-up question from JJK. I believe he wrote in last week as well. He says, "Thanks for discussing my question on last week's show." Well, you're welcome, JJ. We like to feature the good ones. If anything, it seems like the futures premium to cash has increased with the October future 5 handles above the cash. And looking here, he's about right at where that is still to this point. He says, "What am I missing? Earnings season is done and FOMC in the rearview mirror for now. Is this just pricing in unease over current market valuations?" This is kind of what we discussed last week. What was driving this term structure? It kind of is a bit of a Chinese menu. Pick your poison as to what is exactly causing this term structure. Because he is right. FOMC is in the rearview mirror. Earnings hasn't really done a heck of a lot. But he's right here. That we are looking at a weird scenario now where people are clearly and demonstrably pricing in risk a few months out. What is the genesis of this? The question he's asking. I think one that a lot of us are asking. I think his reasoning is probably about as good as any. Do you have any alternate reasoning for why you think you mentioned the short interest. That is, of course, an elevating factor as well. So there are some fundamental factors at work there as well. But still, it's an interesting hypothesis.
I've got another reason behind it. And he didn't mention it in his question. We actually have one of these 5-week between expiration periods, which also will add a little bit of a boost to the front month future because we've got an extra week in there of
that's a substantial amount.
We'll call it risk value. And then we're also going into that time of year that is very scary for everybody. The fall, all those market crashes have always occurred in the fall, haven't they? At least that's how we were trained.
Yeah, that's what we're taught, right? It's beaten into our heads at an early age in the market.
You're supposed to be very worried about the market in September and October. And I've been watching this stuff now for 4 or 5 years, and it's always like this, where we're always a little steep going into the fall. But I think that 5-week expiration cycle between the August standard settlement and the September standard settlement is getting in there and making it a little bit worse.
Yeah, the extra week. It is sometimes we talked about this. We had this a long time ago on this program. We're debating some of the nuances of PUT versus BXM, which on the surface should be fundamentally identical, yet there are some notable differences between their performance. And that, of course, we had actually, I think it was Jason Ungar, the creator of that index, put index on to explain how it was some of the nuances of the rotation and everything else that really caused a lot of those different performance things in products that should otherwise be on the surface identical. And kind of what you're bringing up now is a similar anecdote. Some of the nuances of these products lead to these performance quirks that maybe at first. And that's not to say JK's reasoning isn't sound as well. I think that's certainly, if you had a guess for a macro broad reason why people would be pricing in that risk, that's certainly where I would come down as well. But still, it is an interesting one. We'll keep an eye on it, JJ, because it is certainly a story that we like to talk about here on the show. And yeah, it hasn't. You're right completely. It hasn't lessened. If anything, it has gotten worse. Let's move on to VVIX, Russell, one of our favorite indicators. I think we have a question a couple weeks ago. Someone asked, "Why do you guys disseminate this?" And it's so useful. It's one of the more useful things that we talk about. VVIX, of course, the volatility of VIX, and that in and of itself, is always an informative thing, particularly taken in with the context. Now we have VIX south of the 12 handle yet again, and VVIX, it was spiking last week. It was flirting with the 90s into close with 100, and then now this week, low 80s, actually about 83. As we're recording this right now. So clearly well off those highs, and yet another interesting moment. If you look back at the recent vacillation, I think we got as high in some of the more turbulent periods of the year, Russell. I think around maybe a 130 to 140 out there in VVIX land. So we're well south of the trough. In fact, if you look at the recent year chart of VVIX or so, about 75 seems to be about the near-term floor for that, where it seems to rebound off there. So we're getting close to those levels. What do you think? I mean, this is kind of a weird combination we have, where we have clearly a premium built into the futures, so people are pricing something in. Yet at the same point, we have kind of this almost relative level of complacency being indicated, at least. I won't say priced, but indicated in by the VVIX. So kind of an interesting scenario we're in, Mr. Rhodes.
Remember that wonderful movie, Blame It on Rio?
I know of it. I don't think I ever saw it. Is that Michael Caine?
That's that 2 hours of my life I'll never get back. But
I'm glad you could share that with our audience.
We're going to blame this one on the same thing that we blamed the contango on. We talked about last Friday. We talked about lots of demand for August puts going into settlement, and now that we've got some time between now and September settlement, we've seen that the put-call ratio come down somewhat, and we're seeing VVIX come down as well. So I think it's actually a lack of demand on the put side that has pushed VVIX down a little bit. That combined with we got a little bit of a volatility spike, which might have scared some people off from putting that trade on. So traditionally, forever and ever, we would always discuss VVIX with respect to demand for VIX calls, but I think what we've been seeing going on in the puts the past few weeks has been what kept VVIX up in the 90s, and now that we've got the nearest term standard VIX futures expiration so many weeks out, I think that's what brought VVIX down this week.
It's funny that gets into the nuances we're saying again, because you're right. VIX is 90% of the time a very call-heavy instrument. Yet the last couple of shows, what have we been talking about all the time? It's all puts all the time. In fact, we have some puts coming up. Some interesting use cases this week as well for puts. We'll get to that in a few minutes. But yeah, so now that put frenzy has somewhat died off. We seem to have found our range here on the south side here in VIX. So people aren't as heavily speccing on a drop to, shall we say, the 10 handle or south of that even perhaps. And which is, that obviously has its own issues when you're looking at speccing on a move to, say, 30 versus the drop from 11.5 to 10. It's not as sexy on the downside. Another reason why the puts don't get all the love in VIX land.
Well, maybe it's also because Mark Sebastian hasn't been paying attention this week, and he's the one that's been calling for a sub VIX or sub.
Yeah, he's the only 10. Him and actually Andrew, his counterpart there, is calling.
Oh, is that who's
he flirted with a touching of the 10 handle. But mostly now they've just been kind of piggybacking my crystal ball trade. So
of course.
So hey,
you're on fire.
Went on fire. You can't mess with success. Speaking of messing with success, we won't do it because we're going on now to everyone's favorite segment. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
It sounds as good in the live environment, Russell, as it does on the recorded program. This is, of course, the segment, listeners, where Mr. Rhodes takes the reins for 30 to 40 minutes, usually, and I get to take a nice break. And he regales us with all of the legion of minutia that is the VIX Weekly Options for us. We'll start off in VIX Weekly Options, then we'll get to the new special guest star
to talk about.
in a minute.
So, yeah, we in the VIX Weeklies, we have seen a little bit of demand. Somebody's been buying the 13 strike puts that expire on August 24th, next Wednesday, and I think they're playing the curve because they paid between 50 and 60 cents for those this morning. And VIX, VIX is below 12. So if we get a settlement below 12 and you pay 50 cents for the 13 strike puts, you got a double right there. So I think VIX going back down, relatively elevated near-term futures contracts, as we've been experiencing for several weeks. Bought a put buyer in. We also had somebody selling and this is something that scares me a little bit, especially because we're coming up on that 1-year anniversary of last year in late August. But I saw somebody selling some of the 15 strike calls and the 16 strike calls, and they took in 20 cents for both of them. And they were selling those earlier this morning. As long as VIX settlement next Wednesday, the August 24th morning VIX settlement comes in below 15, then they're going to be in good shape there. But we've seen what can happen with VIX on any weekend.
I don't know what you're referring to, sir.
I know you don't. I've just beaten that one to death.
What could possibly be wrong with selling all that upside?
It never hurts anybody. Just ask the 3 guys that aren't in the VIX pit anymore.
Well, let's also, it isn't the most weekly VIX active week, but there was some activity in the realm of weeklies. If we cast our gaze a little bit farther, if we turn around behind us, Russell, to the other pit out there, the SPX, there was a new addition to the CBOE SPX family. You guys keep kicking the can down the curb of the weeklies. You have, of course, Fridays. You added Wednesdays. And now, as of this Monday, you launched the new Monday SPX Weeklies as well. How was, obviously, it's a tough time to launch a new product right now. Things aren't really lighting it up. But that said, anything of note, any interesting paper really lighting it up out there in the new first week of the Monday Weeklies?
Yeah, they actually traded fairly well for something that's brand new that you launch in the quietest time of the year. Right now, we on Monday, August 15th, we launched 2 SPX Monday expirations, August 22nd and August 29th. And then today, Fridays are when we're going to start listing the next Monday out. We actually listed September 6th Monday weeklies that expire on Tuesday.
Because that's not confusing at all.
Well, that's because Monday options, if we have a Monday holiday, will expire on Tuesday. So that's the day after Labor Day. Today, we've traded about 6,000 of the options that expire this coming Monday, 6,000 of the ones that expire on the 29th, and just over 1,000 of the brand new options that were listed this morning that expire on September 6th. Yesterday, I actually came across something I really pay attention to when we're talking about the broad-based index options are far out of the money put spreads. And somebody yesterday, and I talked about this on CBOE TV, came in and sold with the S&P 500 at 2182. They sold the 2075 calls and bought the 2025 calls and took in 55 cents.
I love those strikes.
and just nice round numbers there. As long as we don't get about a 5% drop in the S&P 500, they do okay with that trade. And that one's going to be held until Monday the 29th. The thing with respect to the Monday options that I'm really looking forward to hopefully picking up on as people pay more attention to them are Friday trades. The time decay that you get for a weekend is very different than what you get for Wednesday or Friday options, at least the day before expiration. So I'm wondering if the time value is going to stay elevated in those, even though we've got the weekend time decay coming up, because you've got 1 day of risk versus 3 days of risk where things can maybe calm down a little bit. I do think that the uses of the Monday options are going to be a little bit different than some of the shorter term uses of the Wednesday and Friday options. Also, Fridays, we've got the employment number. Wednesday, we get FOMC numbers. So you see a spike in activity around those two types of events. We don't really have Monday events. So I wonder if people will be more willing to sell those options, even though they've got the weekend risk, because we tend not to have a scheduled Monday event that might have an impact on the broad-based.
Yeah, you don't see non-farms on a Monday very often, or something along those lines.
At least.
That might be an interesting day if we did have them on non-farms on a Monday. Something else is clearly afoot in the world to cause that to happen. But you're right; it is an interesting play on the weekend risk. That's a trade a lot of our listeners are interested in, and they write in about all the time. It seems like a no-brainer on the surface to just blast away on vol ahead of the weekend. Of course, as we've discussed many times on this program, how you do that is how that trade performs. It's all about execution and when you actually do it. If you come in at 5 minutes for the bell on Friday afternoon and expect to be hitting a nice, carving away nice weekend premium, you're probably going to be mistaken. Probably selling into the following week, the Monday at least. So at that point, maybe a Monday contract is more attractive and palatable, interesting. And you're right; it's only been a week, so it's kind of hard to see how these things are playing out. But it would be interesting to see over time how that trade develops and how people do embrace the Mondays as a tool for that kind of weekend trade. And it'll be, because I know the Fridays, when the weeklies first came out, that was the entire use case of the Fridays. You saw those getting crushed aggressively. Then there was an argument to be made for people coming in and actually scooping those towards the end of the beginning of the weekend because they had been oversold. You get a free weekend worth of essentially a swing at the bat over the weekend if something happens. And then usually Monday is a little bit of a pop anyway, so you get to come out for, it'll probably scratch them at the very least. So that was a popular trade. That seems to have gone away a little bit now too. We're kind of in a weird middle ground. So maybe the Mondays will pick things up. Looking ahead to the mothership VIX options this week. It's kind of an interesting week, Russell, lighting things up. Not the most, again, like we said, not the most active of weeks, even though some days were flirting with that ADV. That ADV out there in the VIX options still hovering around about that 600,000 level. It seems to be kind of just glued there, Russell. Can't really get much south or north of that any time in recent history. And as of Thursday, put up about 481,000 contracts out there. It looks like we have one of our old 1x2 friends coming back to play on Thursday, Russell. In particular, it looks like they were rolling the SEP 1723 1x2, doing that to 12,000 by 30,000 times. So obviously probably taking that off. So I'm wagering buying back the 17, selling about the 2 of the 23s, and then reestablishing out there in October. Same strikes, so not adjusting the strikes at all. The OX 1723, doing that 14,000 by 22. So it's not exactly a straight 1x2. It's more by 1 by 1.5 or so. But still, as we said before, that trade is still the trade du jour. For whatever reason, it seems like they wanted to roll SEP already. I don't know why we take that off so soon, but it's an interesting vow. We also saw, we were talking about the put love before. We did see some more put love going up on Thursday as well, with the SEP 13s and the SEP 14s both fairly active, both going up about 13,000 times on Thursday. The various prices going up mid-market there, but a lot of action out there in the puts. So the puts apparently, Mr. Rhodes, aren't done, particularly the 14 handle. That's pretty interesting. That's clearly, that's
a new one.
Yeah,
a little bit higher than
a little higher.
We had higher volatility this week.
We did see back in July, the 14 strike was a popular one for puts. 14 to 13, obviously. People perhaps reestablishing that love again out there in SEP. Obviously, when you look at the futures, that SEP, the 14 handle is still out of the money, but interesting nonetheless. Wednesday, a little more active day, nearly 600,000. So just flirting with that ADV out there. And again, we had some upside call love. We had the SEP 25s going up. I guess that's a little bit better than it seemed like the 30 strike has been where everyone's fascination has been for so long. So comparatively, the 25s are far more reasonable. People gobbling those up for about 43 cents, 25,000 times. Also saw, I'm curious if this caught your eye as well this week. If there was kind of one narrative I would pull out aside from that 1x2 roll there, Russell, I would say it seems like you can call it maybe financing verticals with puts, or kind of legging into like a three-legged risk reversal, however you want to call it. That seemed to be kind of the trade du jour this week. We saw it here in September with the SEP 2027 vertical going up against the SEP 13 half puts, doing that 12,250 times. We also saw on Wednesday, it looks like it was the SEP 1621 vertical going up 10,000 times against the SEP 13 puts. Again, this time though, looks like they might have been selling the vertical, so actually be more of a kind of a strangle with a call kicker to the upside, I guess, if you want to get technical on that one. And so a lot of interesting stuff. Again, more risk. It seems like this was kind of the trade du jour. We also saw the SEP 13 half 27 straight up, looks like bullish risk reversal go up as well, 5,400 times on Wednesday. So maybe, I don't know, maybe some institutional newsletter came out with risk reversals. I don't recall seeing risk reversals to this size and this volume going up in VIX in recent memory. It's kind of an interesting trade. Maybe it's the new 1x2. Maybe it's going to take the place.
Well, I've always felt like those kinds of trades make an awful lot of sense, because you're getting the upside exposure. If you're selling the puts to get the upside exposure, and you're using the upside exposure to hedge an equity portfolio, what's going to end up hurting you on the VIX part of that trade is a higher stock market. So you would think that some of the losses that you may incur would actually get paid for by your equity portfolio doing a little bit better. I have a feeling that maybe some people are a little bit more aggressive on this because they think that low VIX is coming to an end. You might be a little bit more willing to sell those put options if you have a bit more conviction that we're actually going to see some sort of spike in volatility in the next couple of months. And the futures are definitely reflecting that anticipation, whether they're right or wrong.
Yeah, it's kind of reflecting of also that paper we've been talking about for the last week. People have been juicing up these puts, so I guess if you're going to take advantage of that, maybe last week would have been a better time, but now is kind of the time. You got relatively cheap, relatively attractive strikes on the upside to choose from on the VIX call side, and the puts are certainly juicier than they have been a year ago or so. Puts are not usually relatively juicy in VIX land, so any sort of additional premium I could see maybe being attractive out there. So maybe some institutions waking up to this fact and deciding now is the time to get some bullish. I kind of agree with you. I kind of concur with the thought process behind that trade. And if there is a time to do it, I can certainly think maybe now is the time. We did again also see some more aggressive upside. SEP 25s, maybe that's the new 30 strike, Russell. About 30,000 of those going up on Tuesday as well. About paper lifting offers for about 44 cents out there. And again, more risk reversals going up as well. 16.21 on Tuesday, going up against the 13 puts. This time buying the vertical, doing that about 6,200 times. So, yeah, that seems to be the trade du jour. And if you thought our old 1x2 friends were done, they also put up some on Monday. Monday also a decently active week, about 500,000 contracts. Again, not breaking the ADV, but at this time of year, that's probably not bad. Another short 1x2. Again, not exactly 1x2, a bit of a ratio. This time out in November. We haven't seen them out this far yet, Russell. It was
surprised they're going that far out this early.
Yeah, 17. Yeah. It was November 1727. So a wide one as well, doing that 9,500 by 16,000 times there. So maybe they couldn't afford to do the full 1x2. Doing it a little bit, or maybe they just wanted to keep some more money in their pocket. Either way, doing that's pretty wide. It's wider than we've seen traditionally. Usually we've seen this probably somewhere in the 3 to 4, maybe 5 handle range. 10 handles seems a little bit aggressive. So you're right. This one a little bit more funky, farther out, which maybe you can take some issue with, as well as a bit wide. So we'll kind of pay attention to that one, see how that kind of pays off. But interesting in and of itself. So yeah, if there was a narrative this week, it was clearly 1x2s are back, and apparently everyone has discovered the bullish risk reversal, or just the risk reversal in general, out there in VIX options land. So we'll stay tuned to see how that. I got to imagine that risk reversal paper is going to taper off a bit once these puts, once the bid in these puts starts to, which we've already seen start to happen, starts to decrease a little bit. And also, what's been lighting it up, what the big hot strikes are out there in VIX land. As we mentioned, some options coming off the table this week, so things are a little bit lighter out there. The top strike is not the aforementioned 30s, Russell, which kind of seem to have dominated just about every top 10 chart we've done for the last 6 months. Instead, it's a far more comparatively reasonable SEP 21s with about nearly 270,000 contracts taking the number one spot. Number two is a put, which is probably, again, reflective of what we've been talking about, the puts actually getting some life here. The SEP 13 puts, the strike we were talking about earlier, 260,000 of those bad boys open for the number two. Number three, the SEP 20s, 256,000 contracts. Let me fall off a bit of a cliff, Russell, to number four. The SEP 22s, only 200,000 open of those, but it's good enough this week, at least, for the number four spot on the hot strikes list. Number five, the SEP 25s. It's kind of all SEP all the time this week, Russell. 185,000, and then right behind the SEP 24s, 183 down to number seven. The SEP 17s, 179,000, and then SEP 19s. Again, people choosing a little bit more reasonable call strikes this week, Russell, which is kind of interesting. The SEP 19s, 166,000 open there. Then we get back to the aforementioned SEP 30s. They never go away completely. The SEP 30s, 147,000 contracts. And the number 10 spot on the list, yet another put, the aforementioned SEP 14 put as well, with about 138,000 contracts open there. Total of about 5.5 million contracts open, about 3.7 on the calls and about 1.7, a little more on the puts.
I think this is the first time there've only been 2 puts on here in a few weeks.
Yeah, you're right. It was four. It was 4.5
of the top 10 list, where just a couple of puts. Usually they're in the bottom half, not the top half as well. So those 13 puts. Still kind of sticking out is unusual relative to what we're used to.
Yeah, you're right. Usually having any put on the top 10 list is worthy of note. And then in the past month or so, it seems like puts have been sneaking in there 4 or 5 on the top 10, which is unusual in and of itself.
It's because Mark Sebastian took the week off.
It's because he was slinging all those puts. Yeah. That's why. He was the only one out there buying VIX puts, and now maybe people are taking advantage of that to sell some risk reversals. Anything else in the VIX options land before we move on to some equity volatility here, Mr. Russell?
Nothing in the individual equities. We've really come to the end of earnings season, and you mentioned it earlier. It's been a fairly calm earnings season, but I may have missed one, but I cannot recall an outlier move from this whole earnings season to the upside or to the downside. I usually look at the 3-year history on the individual stocks. And there's nothing that, Hain Celestial, they pushed back their earnings announcement, and the stock got hit pretty hard, but it wasn't the actual announcement date when that happened. But it's been the quietest earnings season I can remember in some time.
Yeah, it was pretty tepid. I mean, a few names outperformed their straddles, but you're right, nothing to the orders of magnitude we've seen in seasons past, where Netflix and others would devastate anything close to that straddle, and now. Yeah, even Tesla opening almost effectively unched.
Oh gosh,
Nobody
cares
unched.
about Tesla anymore.
That was unbelievable. I don't think anyone would. If you had bet anything, you would have bet it's going somewhere. It's not going. It's not. I mean, unched would have been. That's the 00 on the roulette wheel. That's the bet no one makes.
That means that there'll be a lot of people selling straddles into that one next time.
Exactly. I was going to say the same thing. People have a very, very short-term memory, and they're going to all just aggressively blast out all the Tesla they can get, and then next quarter it's going to do 3x at straddle and make a lot of widows and orphans yet again.
Well, we have a student that attended one of our classes on trading weeklies a few months ago, and he actually takes that 3-year history and comes up with neutral trades around earnings. And he called the institute like last Wednesday or Thursday, and he was gushing about how he was 6 for 6 on his earnings iron condors. And I was like, that's great, but that doesn't mean to leverage yourself up next earnings season, because it's been a great earnings season to put on iron condors around earnings. So take it easy, go through another earnings season, and then maybe start to build some confidence.
So he called you to brag about his iron condor performance.
He was appreciative. So
he was thanking you.
The best part was right after
he cut you a check, I'm sure, for all the iron condor trophies.
But I'm going to hit him up for something, because he said, "All right, now I got to go. They're getting ready to introduce D-Wade," and he was actually a reporter that was at the Dwayne Wade press conference for the Bull.
Probably doing a good bit to augment his reporter salary there.
Yeah.
Speaking of Tesla and equity names, individual equity names that seem to have a lot of heat around them these days, it seems like the new one, because after Tesla kind of whiffed it on the earnings, it seems like the new name that everyone's obsessed with these days, Mr. Rhodes, is Valiant, VRX. So everything we touch with this one, people just can't get enough of. So we put it out earlier this week. And I didn't put the results in here, Mr. Rhodes, purposely. So just to prevent you, in case you were tempted to cheat, I prevented that opportunity. I do have the results right here that I can cheat, because I am the host.
Did you do a poll?
Yes, we did. We asked people at the beginning of the week. At the time, VRX was printing right around 26.5. It was up 7%. That was back on Monday when we put the poll out. This is obviously our question of the week, so it's coming to an end today. We said, hey, it's up 7% today. It's right about 26.60. The implied vol at the time was about 63. Historical 30-day vol was nearly 100, so thing had been rocking and rolling quite a bit. And we asked people, trade up 1 month out, what would you rather do? Would you rather buy calls? Would you rather buy puts? Would you rather sell premium, or would you never touch VRX in a million years? Any of the listeners here, any of you guys are familiar with VRX or trade VRX at all? It's Valiant. So, it's not VIX, but it's close to it.
It's as volatile as VIX.
One symbol in the middle off.
What side is Ackman on the
yes.
Bill Ackman? Which side is he on? Is he long or short? He's long? All right, I'm going to say that everybody voted to buy puts, because he's very unpopular these days.
Interesting. And what is your individual choice if you had to make one,
I wouldn't touch that stock.
I hear you.
With your money.
That's where I'm leaning as well.
Okay.
Well, that was kind of a bit of a toss-up. We still have a couple hours left on the poll. It's been a pretty heated one, as you might imagine.
I'm going to go vote.
But the winning right now, unless Russell tips it, is very close. Is buying calls with about 34%. So people are loving themselves. Still some upside. This thing has been annihilated by that. It's pretty much trading a tenth of what it was just a year ago. It was trading $260 or so this last August. Yeah. Now trading about $26, $28. So yeah, this thing has seen better days. So maybe I can see why some people will be leaning to the call side. Buying puts only 15%. So selling premium a surprising 20%. People kind of coming in attracted by that 100 H vol, maybe not realizing that it can go much higher than that. And the more rational, calm heads won't touch VRX with the 10-put poll. About 31%. So that's not factoring in Mr. Rhodes' maybe.
I just voted.
You vote early, 32. Vote often. You bumped it up to 32.
I did. I just bumped it to 32.
You're changing. You just tipped the needle. So we'll see if we get a few more coming in there by the end of the day.
I'm going to vote again. It's Chicago.
Vote early, vote often. It is Chicago. You're right. But that brings us to some interesting realm of But aside from all things equity and index vol, we like to touch on commodities as well. This has been an interesting time. I thought we'd take a different approach. We talk a lot of the big WTI and the kind of the COMEX gold options. Let's look at what a lot of people like to trade as well, which are the ETFs this week. I brought up charts here, courtesy of our friends over there at Live Vol. Hoping they could join us this week. Couldn't make it, but we do like using a lot of their stuff over here. And as you look in here, let's start off in the realm of crude oil. And we've talked a lot about crude. You know, of course, you guys put out the VIXs, OIV and OVX, their respective VIXs of crude. One, of course, for WTI, OVX for USO, the very popular oil ETF. And looking here at the skew for oil for USO ETF, which is kind of interesting. You know, you'd think that, you know, it was WTI has been very put heavy for a long time. You'd think USO would maybe lighten up on that a little bit, but it seems like looking at our chart here from Live Vol, it's dramatically steeper. Yeah. Interestingly, of note on the upside, all the calls are kind of flat. You think people will be piling into calls, with the exception, if you look at that one kind of aberrant month there, that's the Jan 2017 month. Someone clearly loaded up on some upside in Jan 2017 in USO, because it sticks out like a sore thumb. The rest of the months are fairly flat. So you'd think this is, you know, of course, we're in an environment now, the Saudis are kind of talking up crude again, so we have a little bit of support to the downside. Crude has rallied a bit. It's gone from the low 40 handles up until the high 40s out there in WTI. USO has moved commensurately as well. So you'd think people would be, perhaps, the calls would be a little bit steeper, the puts maybe not so much. And yet, that's not exactly what we're seeing here. Does that kind of surprise you like it surprises me, Mr. Rhodes?
I hadn't looked at it until you started talking about it, and you heard the audible gasp.
The audible gasp.
Yeah, there's some opportunity on the put side there for some selling. I know I'm not supposed to say things like that, but
that's not a recommendation for information purposes only.
But if you don't think oil's going down, they're giving you some opportunity.
Yeah, particularly out in USO, that is rich.
Because the implied vol is really high to the downside.
So if you are maybe inclined, like a lot of our friends were out in VIX land, to do some bullish risk reversals, it looks like USO may be setting up fairly favorable, unless you do it in Jan. Don't buy the Jan calls. But other than that, you can get cheap upside and rich downside. That's a good combo if you like, if you're doing bullish risk reversals out there. And you guys, if you're listening at home, we'll put the graphs and the charts in the show notes so you guys can follow along as well. Let's move on to the other commodity everyone's always asking us about, Russell. Let's go gold. Let's go GLD this time rather than the big gold options. I know a lot of our listeners love to play in GLD. I brought up the skew graph here on Live Vol as well. And talk about a contrast, huh? It's like an ice cream cone or something along those lines. It's another one where there's a clear and demonstrable bias to the USO when you look at it. Obviously, it's all to the downside. Gold looks like someone did a scatter plot and just kind of threw it on there, and it's got a heavy dose of symmetry, indicating that, you know, we've seen. That's kind of why I like talking about commodity skew even more than, let's say, it changes.
Yeah.
It's variable. You know, SPY, SPX skew is always going to be what it is. The slope will change, but it's not going to change its shape, except for some rare aberrant scenarios. Gold changes every week. And looking here.
And we actually talked about this in our class when I was talking
we can
about
pull it up
the
here.
behavior of volatility. Actually, I'm wandering aimlessly to pull up what you and I are looking at, so everybody else.
So the listeners here in the classroom can follow along as well.
Yeah, but the skew in gold is, we don't want that one. We want the ones that looked interesting.
Do all months,
September, October, and then.
Let's click all months. They'll see the full thing. All on the top there.
All months.
Yeah, there we go.
Well, I don't want to do all. You can't read anything from that.
That's why I want them to see take it in as the take it.
Well, I mean, what is this telling you? That's gone.
Madness.
It's a little bit more symmetrical, but what I really thought was interesting. What I like to do is, get those out of there. I like to actually take a few of them off and look at the standard ones where you're getting the most of the activity.
It's no fun if you don't have a front month in there to go crazy and like a weekly or two. You know, that's where the fun is.
But it's starting to look at this, and for people at home, I'm looking at the September and the October standard expirations, and that shows higher skew to the call side, and then you switch over to oil, USO, switch over to oil, and it's kind of the opposite. See, the skew is actually on the put side, and this is what we were talking about. Was when I said I'm not supposed to make recommendations, but I mean, look at the implied volatility of out of the money puts compared to out of the money calls on oil. they're expensive. So, I mean, either you believe the option market and you just short oil, or you short oil outright, or you, if you think that oil's not going down, maybe some sort of geopolitical event's going to make oil go to the other direction. There's opportunities to sell puts or sell put spreads and buy an out of the money call, like you just mentioned. There's some opportunities there. So much for only talking about VIX today.
We're broadening your volatility horizons. But now it's your turn to broaden our horizons as well. We're going to head on into our volatility voicemail. We have a bunch of questions from our listeners here, but if you guys have some as well, just raise your hand. Russell has a microphone, so start mulling those over as we head on into our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility Voicemail. This is, of course, the portion where you guys get to take the reins. I get to take a bit of a rest. Of course, there's only two of us today, Russell, so I don't get that much of a rest. Let's kick things off. Actually, we have a comment here. Mark Brandt, he says, kind of what you were talking about before about the SPX Mondays, how much you liked them for a weekend trade. He said, I'm really excited about the SPX Mondays, like the Greasy Meatball said on Volatility Views. It's a great weekend risk trade or phase. That's kind of exactly what you were talking about. The use case for those Monday weeklies is certainly in the weekend trade. So we'll see how that plays out. We have obviously only 1 week behind us, but clearly people are as excited as you are, Mr. Rhodes, for that one. Let's jump on a couple legs that we're kind of coming up against it here. Let's go to James Aldo here. This kind of talks about what we were talking about last week as well. He says, RE, your circuit breaker talk from last week, is it correct to assume that circuit breakers that are too tight can actually increase volatility? Or is that a myth? You know, this was something we saw played out pretty starkly in China last year, where they were playing around with their circuit breaker levels, and as a result, we saw shutdowns and halts, and a lot of people were using that data to really kind of put meat to the argument that if you do these things a little bit tight, then of course you can. I mean, think about it from a. I don't know if I like the term increase, and maybe I like the term accelerate more. Because that kind of, if you think about you getting close to these barriers, you know, what are you going to do? Oh, wait, we're about to shut down. We're going to shut down. What are you going to do? You're going to flood the market with your orders to get them done that much faster, that much quickly, where you probably wouldn't do that in a much wider circuit breaker scenario. Right. So in that scenario, you're going to see the market accelerate right towards that band.
Oh, yeah. So, back in the 90s, we had tighter circuit breakers. And I can recall everybody watching their screen and just waiting for us to hit one of them. And we would gravitate to those points. It was almost like a pin risk to a circuit breaker when it was only a 1 or 2% move in the S&P 500. I don't think that really has happened now that they're so wide. We rarely get close to them. You know, we did hit a circuit breaker on August 24th last year in the S&P Futures, but we kind of bounced right off of that. I wouldn't say that tight circuit breakers can increase volatility, but I think they can kind of skew the trading activity when you get close to them.
Yeah, exactly. Skew accelerates. Yeah. Increase is kind of a bit of a loaded term, but it does clearly has a demonstrable effect out there. Listen, we have a bit of a quiet audience, listeners. They're too shy to ask.
Nobody wants to ask a question?
I guess Russell didn't do his job and fire you up sufficiently. You need the crowd warmer.
Ask DJ's question.
The sitcom. Okay, we'll go to DJ then, and then we'll move on to the crystal ball. DJ, I like that. This one's a funny one.
It is a funny one. That's why I want you to ask it.
He says, crude futures provide barrels of crude on delivery. What do VIX futures deliver? Does a truck full of VIXs pull up to my house? Would you set our friend Mr. DJ straight? What do you guys send to his house when he buys the VIX futures and he wants to take delivery? What does he get?
Well, first off, I read that as a truck full of Vixens, which yeah, I know. But the first time I looked at it, I was like, what? But no, VIX futures are a cash settled instrument. So if you buy the VIX future at 13 and settlement is 12.5. The multiplier is $1,000, so you would be out $500 on that trade. Both VIX futures and the VIX options do not settle into a truck full of VIXs.
How awesome would it be if
That's
if
I,
they did? I think you should
I,
talk to
I,
the product-
I wish that I had.
team.
When there are three of us, I get to play around and make pictures and put them on Twitter and everything while you guys are chatting away.
CBOE
I got to come
VIX-mobile.
up. I got to
It
come
comes
up
to
with.
your house when it expires, and it gives you the check in
Yeah.
person and like a VIX envelope, big VIX on the side.
We're gonna put a greasy meatball driving a truck with a bunch of VIXs in the back of
It would
it.
scare a lot of people away. I think.
Yes, he would. So no, they're cash settled instruments. So that's how that works out. So,
That might be our title of the episode this week: a truck full of VIXs.
I love
All right,
it.
we're running up against this. Let's dive really quickly into our final segment of the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. As the name implies, this is the portion of the show where we guesstimate recklessly, some may say wildly, at the future of what the volatility gods hold in store. I hate to break it to you, Mr. Rhodes, but I think this is my third consecutive victory here. As I predicted about 11 1/4 last week. Of course, we're trying to predict where VIX Cash will be at the close of showtime, listeners, 1 week hence. I said 11 1/4 last week, and as of right now, we are 11.66. Mr. Greasy Meatball was trying to cart me to the south side. He went at 11, but he is indeed too low. And you were going again. You're buying a lot of vol that they're selling up at 13. So that puts me at the closest. I think we should do a new thing where the winner can get to choose whether he wants to go first or last instead of having to go first.
It's up to you.
So I have one again.
Are we gonna guess for him?
Yes.
Okay.
The ghost of the Greasy Meatball.
No, I already have the number for him.
We'll undoubtedly have to pick as well.
Mm-hmm.
And of course, as I say that, my notes crash. I'll let you keep track of what the guest
Okay, I'll write them down
this week, Mr.
All right.
Mr. Rhodes. So I went 11 1/4 last week. I've been trying to kind of fade a little bit. I haven't really been feeling the where this vol is going to be coming from going forward. We have, like our listener said, we have Fed in the rearview mirror. Earnings are kind of in the rearview mirror. Barring an aberrant August 24th type event again, I don't see where the vol is coming again this week. So we're at 11.63 right now. I said 11 1/4 last week. I kind of like these levels. I wouldn't go too much lower. I'm not feeling the 10 handle like the Greasy Meatballs. I think I'm going to keep myself at the same level, 11 1/4 again for next week. Are you still feeling the upside love, or are you going to come down to the dark side with the rest of
I'm going to be 11.75.
Oh.
I need to win.
You do need one.
I need a win. I need a win.
It's been a while. It's been a bit of a drop
So
for you.
I'm going 11. And then what we're going to do, since Mark's baby was 7 pounds 7 ounces, he's going to be 7.7.
I love it. Perfect. That's very appropriate. And obviously very doable level for the VIX.
Yeah.
Hasn't been in many, many years. But who knows? Maybe next week will be the quietest week in the history of the markets. And
Well, he's been calling for it to break 10, so
he has been calling it for now.
7.7.
When you
I
leave
like
the
it.
show, the cats will play. All right, that's going to do it for the crystal ball. It's also going to do it for this episode of Volatility Views. We love doing it down here in the CBOE. There's a couple of shows we've done out here. We did a show in your auditorium a few weeks ago, our option block show. Now we're doing Vol Views here. Kind of fun getting a nice little tour of the newly revamped Options Institute. Before we go, Mr. Rhodes, what's cooking in the land of the Options Institute, as well as with our friends over there at CBOE Liveball, who I know whose headquarters you just visited very recently.
We are doing we're doing a VIX focus class, which will resume in about a minute after we finish this program. We've got 4 more four more focus classes before the year's out. Weeklies, income trading, index trading, and generating trading ideas. That's what I can remember for all that. I just booked my ticket to Ireland. Are you coming to Ireland with us?
I would like to. I don't know if I can make that fit in the schedule. It's in September, is it not?
Yeah.
You're talking, of course, about Risk Management Europe.
Yes.
Which I have yet to attend. I wanted to go to the Sintra one very badly. I have fond memories of Sintra, but I couldn't make it. I just couldn't. After having done it that year in Florida, I couldn't justify the European. Even though I am tempted. It is a different clientele.
I'm telling you, the flights to Dublin, it's like $500. You can do it. You can sleep on my couch.
You sell our budget manager at the Options Insider, and maybe I can get approval to go. Meanwhile, though, that's going to do it for the Crystal Ball segment. It's also going to do it for this episode of Volatility Views. On behalf of Mr. Rhodes and indeed myself, we also want to again send our congratulations out to the Greasy Meatball, a new Greasy Meatball in the family. Congratulations to them, and we'll see you next time right here on Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.